What's up, YouTubers, market participants, and day traders? You just stumbled upon my channel where I'm going to review my day trades daily. So if you're new to the game, you're struggling to make money, and you got a small account, you found your boy. Go ahead and like, comment, subscribe. Definitely join the family because AKA Will the Wise, AKA Will the Market, and AKA your boy are here. Let's jump into these trades.
Hey, what is up, YouTube? Your boy is back with another episode of Will of the Market. This was a very beautiful play here. I'm going to go over it from start to finish, how I thought about the process. I did take a trade before this initial big juicy well that came through, but I'm not going to go over that one. I'm just going to say and go over my thought process on how I caught this big well and why I am actually still in the trade. I'm holding that last contract to take me to the promised land. I am hoping for it. But let's go ahead and jump straight into the trade. Cool. So today we're going to talk about the rejection off all-time highs. Let's go ahead and get into this. So here is a chart of the 30-minute and the hour. So let me go ahead and move this out of the way. It's kind of in the way right now. This is the 30, and you have the 1 hour of the SPY. So you can see that we hit this on Monday of this week. We hit this high, right? And then we just reject right off of it. And that was the high of 563.91, right? So with this trade in mind, I could already see like on Wednesday, we had this already downdraft come through, and that was actually the better trade, to be honest. And it kind of was failing to get through these highs, and that's where you could have took the nice juicy trade to go down. But that trade also presented itself today yet again, and we try to get up to that level again, reject, and then profit. Okay, so that is basically the time frame I was looking at the most, was the 30 and the hour, and then I'm using the 2 minute and 15 and 2 minute 5 and 15 more to position myself, right? So this was a smaller trade, but the really cool thing about this trade is I'm still in it with one contract, still in it, and the contract right now is valued at 90, right? And I got them all at 38. So I got 4 of them for 38. Total position size 152. Sold 3 of them, in my opinion, way too early. However, that was my 20%. Hey, I take some off the table. You can never ever. You actually have to have a rule for profit taking. You can't. Whenever you have a good trade and it goes well, just know that that always doesn't happen, and the pullback always happens. And if you were to take all your trades ever, and you would realize that market goes up and down, that when you have that profit, if you were to take it most of the time in the beginning all the time and let a little bit ride, you will be way more profitable in the long run. So taking my initial investment off the table was good, and letting the last one go was perfect in this case scenario. So ending total right now is at 231. That still hasn't been decided. Also profit 79 still hasn't been decided. Currently the percent is up by 52, but this last contract is at 136%. Let me tell you, right here, which one? So 30-minute. In this 30-minute candle, when it was closer to the bottom of that candle, it was actually at 240%. It was valued at $130 per contract. That is magnificent. I don't care about this number, the 130 per contract. I care about this number, because once you get really consistent with this approach and you hit 240% on a regular basis with one contract, not with one crashers, with a portion of your position. In this case, it was one contract due to my risk management and it being a small account challenge. Everyone has 38 bucks that they can let ride and turn into $40, $50. Take your profit off, let one ride, goes up to 150, 130. That's beautiful, but that's not the point of the trade. The point of the trade is this 240% hitting successfully. How did I do that? It was with an option that expires in 5 days. So I didn't go with the SPY dailies. The SPY dailies could have worked out. They very well could have, but SPY dailies is gambling. It really is, because the market has so much power to drain that it basically intends to drain those options dry by the end of the day. So why fight time? This time I have a little bit of time. That's why I'm holding one until tomorrow, and we closed near the bottom range. If we just open up here at 555, hitting a triple bottom to play the upside back to the upside, then that last contract can be gone at 555, maybe giving me, who knows, 400%, right? It's going to be in the money with also not expiring till Monday, right? Or Tuesday. So that is the potential here you have using small amounts of money, making sure you're looking at higher time frames and trying to play the trend the best you can, taking some off on the small move and letting the last contract take you to the promised land, right? So let's go ahead more into the last part of the trade where we jump into the trade. So let me go ahead and move my head over. Perfect. All right, so with this trade, sorry, I apologize for that. I got in at 1236, a little too early. A little too early. The price action was where I wanted it to be. It was still at the 563, right? The high was 563.91. I believe we got up to like 563, like 50-ish, 60-ish, right? And that's when I kind of was like, okay, right here I can start my position, right? Start my position, have the stop above. If it breaks highs, I'm out. It is what it is. We're going to new highs. Maybe we hit 565, yada, yada, yada. So that was the plan. I was going to execute it appropriately, take the little loss at this point in time, because at that point in time, I have no idea where it's going. But before it does break that, then I do have a chance of at least playing it back to the bottom range, right? So I get in at 1236, which is this red candle right here. I'm going to go ahead and remove that so you can see it again. It's that little red candle there, because I saw it kind of wedging here, which usually, I mean, wedges can break out any other way. I don't care who you talk to about, it's going to be for sure up or down. There are so many wedges and patterns. That's not something I want to teach at all, because that's gambling. You have no idea where the wedge or flags are a little bit differently. Wedges are, yeah, flags are a little bit differently. If it stays in the upper portion of the move, upper third percentile move, you have a likelier chance of it following through, but that is the market. Nothing is guaranteed, right? So gotta stick to your risk management. So I did enter here, but on the 15-minute chart, you can see that still was a solid entry. Any entry in this 15-minute bar was perfect. Honestly, it would have been better to enter it in closer to the 1244 mark after it has confirmed that red is taking over green at the highs. Very, very important. Red taking over green at the highs. Taking over here, you get into the position, you hold your stop up here. If it breaks through, you're out, so be it. I would have took a $20 hit. It goes in my direction, I get paid, right? So it ends up falling through. I end up selling way too early. I didn't hold through this and sold here, or even sold here. That would have been a first good spot to sell. I didn't. Like I said, take your money as it comes to you, let the last one go, and bam, I reap the benefits of all of this, right? And in this last right here, in this last push down here, that's where the contract got up to like 240%, which was very magnificent. I was thinking about selling it. I was thinking about selling it, but no. I made the contract free already. The contract is free. It has some time to grow into a beautiful almighty tree, and I'm going to let it grow. Tomorrow opening, if we're down and we try to recover, I will sell it. If we are up and we start going down, I will hold. If we are up and we start recovering, I will sell it, because I don't want the contracts to go into the over the weekend, especially with no time left. Yes, I could still hold it, but not really the plan here because I don't want to hold over the weekend. I mean, for the downside, it is better because downside does mean like anything crazy happens over the weekend, you're most likely to go down than up. But we want to avoid gambling, right? So I put myself in a very good probability state of mind to reap what could happen, and it did happen, right? So now that it's happened, I need to make sure I take my two. Next time it go, yeah, in the morning, if it gives me the 200, I'm gonna be patient. If I see weakness in the market and we keep going down, I will sell it eventually. In probably the first 30 minutes to an hour, 2 hours. If we have really crazy selling pressure in the first 2 hours, that will be great. If we don't, it'll be what it is. I've already at this point hit the home run play mindset game. Well, I hope you guys enjoyed this. I hope you guys found some value in it. Go ahead, like, comment, subscribe, share with your friends. If you're all trying to get your small accounts up, I am going to be going over my small account trades to help people see and realize that you can use little amounts of money and turn it into big money. So I do hope you guys enjoy the rest of your day. Peace.